Dan, let's begin here by establishing a few key facts. You are the former CFO and former head of macro trading at Tiger Management.
Huh?
And Pantera is we can call it a cryptocurrency hedge fund?
Yeah.
How big?
So we've managed $1 billion in cryptocurrencies, and prior to that, $1 billion in fiat currency when we started in 2003.
You've been focusing on crypto for 5-ish years, is that right?
I started actually in 2011,
Okay.
and we launched our first fund in 2013.
So I would have to imagine that since 2013, the returns are pretty eye-popping.
Yeah, it was in the New York Times recently, going over 25,000%. It's come back a little bit, but it has been a very good ride.
To what degree do your returns track Bitcoin? How correlated are they?
Yeah, so in the early days, our first fund was just a Bitcoin fund. It allows institutions to get exposure to Bitcoin, and it perfectly tracks Bitcoin. Since then, we've launched different funds that allow exposure to all the other currencies and then even equities in the space.
So Pantera is a real hedge fund, which is to say it goes short and long, correct?
Yes.
But you're also fundamentally bullish on crypto, correct?
Yes.
So how do you reconcile those two things? Given the fact that you're fundamentally bullish and you think that coins and perhaps tokens as well will appreciate in value over time, how do you decide to go short and when?
Yeah, so we believe
Or
it's
sell for that matter, right?
Sure. So it's a new asset class, and we wanted to build our flagship product for the 10 to 20-year future rather than just right now. So it's set up as a long-short hedge fund. Obviously, we're very bullish on the space. We think we're way below, maybe an order of magnitude or two below the real fundamental fair value of blockchain. So it's normally 85-90% long, but in 3, 4, 5 years, it's going to be more like a long-short hedge fund. It'll be 60% net long some things, short some things.
One of the big questions many people who are taking a close look at crypto have is how exactly do you go short? Mm-hmm. What are the mechanisms?
Well, we already have CME futures for Bitcoin, so there is a very easy way to short those. And then for other currencies, it's essentially OTC borrow. So you're calling up big owners, early developers that have these positions, and offering them some 10, 15% annual
I was going to
fee.
say, it's got to be pretty expensive.
It sounds expensive compared to stock borrow,
yeah.
But these things move that in 15 minutes, so it's very inexpensive. And I think you're going to see, you've seen some of the big Wall Street firms have announced they're going to do custody of crypto. So within the next, I think, 12 months, you'll have a very vibrant crypto borrow market, just like you have a stock borrow market.
As you know, people complain there's not enough liquidity in crypto. They say that most of the market cap is tied up in perma-long positions. What's your experience?
Oh, it's a fascinating market. It's a $400 billion market that nobody owns. It's very strange. You haven't seen one of those before. So it's mainly, like you said, early adopters, technology enthusiasts, libertarians that have positions. And so big institutional investors really aren't yet involved. That means the float is a lot smaller than you would otherwise see. But
how big is it? How big is the float?
So the float, cryptocurrencies trade about 5 times more per day in volume compared to their market cap as a stock would. So they're highly, it's a very hype-driven market. It's very speculative.
But that's obviously not $2 trillion because so much of it is locked up.
Yeah, so that's why the prices move a lot faster. That's why the volatility is much higher, because a very small fraction of it actually is available for sale.
Of that $400 billion in market cap, do you have an idea of what is?
It's probably 10 or 20% that actually trades, that's actually free for trading. And a lot of it is in funds like our Bitcoin fund has daily liquidity, but most people stay in for 5 years, so it's a very low turnover fund.
How liquid was the market when everybody was dumping back in December and January?
Oh, so it's trading, sometimes 5-10 billion a day in each currency, so it's a massively liquid market.
What trade signals work in crypto?
Yeah, so our flagship fund is exclusively machine learning algorithmic, so we're looking at fundamental data to see which currencies are cheap, which ones are rich. And the data can be either the actual transaction volumes, the fees being paid to the miners, how many users on the system, but it's also sentiment data. Mm-hmm. These are very hype-driven things. And
momentum?
Back in the day, it's not even momentum, it's Twitter, GitHub commits, all the people actually getting engaged in these currencies. And now there's 1,500 different projects out there, traded in 25 different languages, so it takes machines to read all that.
When you look at the charts right now, what do they tell you? What do you see?
Yeah, so almost every day in the last.
Because you're a
7
macro
years.
guy, right?
Yeah.
You gotta
Yeah.
you gotta love charts.
And so over the long haul, when people would say, hey, is today a good day to buy? I was always like, this is early stage venture. You should just put your money in and look at it in 5 years. We recently issued only our third buy recommendation in the last 7 years. And Bitcoin has come down below its 200-day moving average. And that is important because the currency's been going up at 170% per annum for 6 years. If it ever goes down below its average, that means it's really come off. It's come off 65% since its highs. And if you put $100 in, each of the 4 times it's touched its 200-day moving average, you'd have a 285% return.
So you think Bitcoin's a screaming buy?
It is a screaming buy right now.
You said moments ago that current values are an order of magnitude or 2 below where they should be. That's to say, Bitcoin could be worth 10 times as much as it is now, or 100 times as much as it is now?
Yes. I think so. Bitcoin is one of many currencies, so keep that in mind. It's kind of the mega cap of the industry, and there's some smaller caps. The industry as a whole is 400 billion. Easily could go to 4 trillion, and 40 trillion is definitely possible. It's the 10-year forecast. It's not going to happen overnight, but it's global M0 or global M2 is 100 trillion. So if Bitcoin becomes a store of wealth, gold's 9 trillion, M2's 100 trillion. There's just some big numbers out
So
there.
$40 trillion of market cap, divide that by the maximum 21 million coins, and that's the price of Bitcoin.
It's not the price of Bitcoin because Bitcoin's probably going to be, Bitcoin used to be 100% of digital currencies in 2011. It's about 30% now. It might be a lower fraction in the future.
I see. How long do you think before we see the kind of prices we witnessed back in December? Bitcoin at almost 20,000, Ethereum at, call it 1,400.
I think that happened within the next 12 months. The market's already come back about 25%, and I think within 12 months it'll have new highs.
Why, Dan, is EOS setting new highs right now, but Bitcoin, Ethereum, Ripple, and the others are still meaningfully lower, less than half in most cases than they were at their peaks?
Yeah, so obviously there were attempts to do digital currencies for decades. Bitcoin got it right. And since then, there's always been the next Bitcoin, and there's been Litecoin and Feathercoin and
Zcash,
Zcash and Ripple. Right now, EOS has that perception. It's the next Ethereum. I think we'll probably cycle through those things over time.
To what?
Oh, I think the more interesting currencies or tokens right now are Maker. It's a stable coin, and that's kind of the next really important thing for the industry. And then Augur, their token Rep. It's going to be the first major project to go live on Ethereum. It's going to absolutely prove out whether all of this that we've been talking about for 5 years is working.
How much of your portfolio is in coins, and how much of it is in tokens, or call it ICOs?
So the big split for us is in cryptocurrencies versus venture, and we have the bulk of it in cryptocurrencies and a minority in venture. And then within the space, it's about equal between the big liquid cryptocurrencies and the pre-auction ICOs. And those are kind of like the IPOs of the 90s.
What's your single biggest position?
So our single biggest position is a protocol called Icon.
Don't know
It's
much
a Korean,
about that.
yeah, it's a Korean blockchain.
So that's bigger than Bitcoin, that's bigger than Ether, that's bigger than EOS, that's bigger than Ripple, that's bigger than everything else in there.
Bitcoin has recently it's only been 10% of our portfolio. It's one of 60 different liquid things you could trade.
How interesting. You have $1 billion, roughly speaking, right now. Do you plan to raise more money?
Our funds are open. Most of the strategies are incredibly liquid. Our ICO product's the only one that has liquidity constraints.
Tell me a bit about your LPs. What percentage of them are high net worth? What percentage of them are institutional? I guess there's probably some friends and family in there as well.
Yeah, so in our previous era, it took us probably 8 years to get 60 LPs to do $1 billion. We already have 500 LPs now because it's such a popular space, but it's mainly people managing their own money. Sometimes it's 100 grand, sometimes it's 100 million, but it's somebody who can sign their own check. Probably only about 10% are very institutional investors, and our prediction is over the next 18 months that changes.
Why are institutions so reluctant to embrace crypto?
So early days, it was, Bitcoin was considered skanky and all those issues. But now we have CME futures, Goldman's clearing it, State Street says they're going to custody it. So it's getting institutionalized. The very last bit is there isn't yet an SEC-regulated custodian for cryptocurrencies. That's really the last thing. I think in the next 12 months, someone will have solved that, and that will essentially check the last box.
Your background is in traditional finance. Tell me what you think about Wall Street, this mostly hands-off approach that all the big banks have taken. Let's call it the financial establishment has taken to crypto.
Yeah, it's mainly been a West Coast thing. It's mainly been tech and people from the payment space that have gotten into it. But hey, anything that's a $400 billion asset will not be ignored for long.